Hello traders, Mark Chapman here, the creator of the trademark Trap Traders concepts. Welcome to today's Trap Traders Trade of the Day analysis. Today's date is the 23rd of May 2017, and the trap we're going to discuss this morning is one that I don't think I've shared with you guys in the daily video before. It's referred to as a multiple structure failure trap, and I hope you find it helpful. And basically a multiple structure failure trap is where you have price heading in either direction. It can be up or down, makes no difference, and price pulls back and it attempts to make a new high, or perhaps it sometimes does on that first attempt, and then it falls away. Now then, what it does from there is it actually attempts to have another go at those highs. Now what I'm going to do is I'm not going to draw any retracements in, I'm just going to draw it so that you get the idea. It has another attempt and then it fails, and it has another attempt and then it fails, and what you get is you get this cascading effect where price didn't quite manage to take out the high of the prior swing, and you get traders trapped, so that whole location becomes an area where they get stuck. Now these traps don't happen every 5 minutes, so it's not something that I discuss on a super regular basis, but when it does occur, they're well worth obviously highlighting. Now then, in this particular case, we've got that going on over here. So we have a high in price, right? Well, first of all we have the move up, then we have the high, pulls back, makes a new high, pulls back, breaches the prior high, and then sells off. From this point, what we have is a continuing attempt to break the high of the prior high, but it doesn't quite do it. So there's your cascading effect. Sorry for the drawing, it might not be super clear because I've got loads of lines on there, but hopefully I'm making the point. So I'll just draw it from here. So there's a level, and then it doesn't quite take out that level, and it doesn't quite take out that level, and it doesn't quite take out that level. You see what I mean? So you get this cascading effect, and some of these are at the same price point, so it's obviously like an area of resistance as well. But net that whole location becomes a very sticky area for price to try and get through, because you've got those traders who went long in there, who've been trapped in those positions, and really if they've been in these trades down in here, this would be the first time they've had this opportunity to bail out of those positions. And if there were buyers, obviously prices over here, they must sell to exit. So over here would be that first opportunity. So I hope that makes sense. I'll probably attempt to draw it again for you, just to try and highlight it the best I can. Let's change this color. So price has another go at this high and it doesn't quite make it. It has another go at this high and it doesn't quite make it. It has another go at this high and it doesn't quite make it. And that's that cascading effect. And traders who were attempting to take those trades, hoping that they would follow through, obviously, to new highs, each time that happened, it didn't quite occur, and then price drops off. And they've never ever had price return back to that area, but this would be that first time back, and obviously they're going to bail out of those positions. And there are, obviously, as I said, there's levels there that have acted as resistance as well. So we'll just see how price reacts up in this area. But net, it's an increase in probability that you would likely see some type of sell-off in this area. If you look at this move here, if you imagine this is a Fibonacci pullback, we haven't had any yet, so it's not beyond the realms of possibility that we're going to see at least a pullback before, if price was to follow through, you would hopefully make some money, because obviously this move in here, it's unsustainable. No retracement into a big old level like that, it's unlikely it's going to get through that without any type of pullback. So it's a high probability trade. Also, I want to show you another trick as well that can help solidify these types of ideas, is by using the dollar index as well to give yourself a read in terms of a potential turning point. So here's an area here that's obviously acted as support, resistance, etc. And then in this area here in particular, let me just highlight that. you've had a huge bounce off that area, right? So as price comes into here again, notice the price action, there's been no pullback. The minimum you would expect into that area is a pullback. So going back to this, going back to the other price chart, right, it's lining up with a potential turn in potentially some dollar strength, at least in the form of a retracement, which obviously would help you make some money anyway in this trade. Who knows? It turns it fundamentally. That would be nice, but in the end, it's still probably got a little bit of juice in this trade anyway. There's a trap in here as well, a structure failure singular. It's a bit of a candle flip trap, if you can see that. Again, it's a retracement going up into an area of resistance. Not exactly a great idea, but someone took the trade. They go long in there, believing it will follow through, and then they've been majorly caught since then. So again, they're going to be able to bail out of those positions for the first time. So net, this looks like a decent place to get short. This whole area is not very big. It's about 50 odd pips. So, you know, that entire distance is something like 50 pips. So it's a low risk trade, high probability, and I hope that helps explain the multiple structure failure trap. And if you'd like to come and join me in my brand new inner circle, click on the link below and I'll show you how to look at the markets in this way. And there's so many other traps I can talk about, but today I thought I'd talk to you about that one. Take care, all the best.